In this video, I'm going to show you exactly how we use Apple for a cash secure put at support, knocking down almost 7% cash on cash. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, we're going to talk about the cash secure put again. We have found an awesome strike price for Apple. Now, this is AAPU. And if you know how I trade, anytime we can use a leveraged ETF, we want to use that. I mean, you can go out and buy Apple for $200, or you can use AAPU for $20. Now, it's leveraged, and it's going to move 2 times what Apple does. But if you're in the volatility game, this is what you want. In this video, I'm going to show you not only how we picked that strike price, I'm going to show you the trade that we did. I'm also going to show you the emails I sent to the members leading up to this trade. Now, I'll let you know I've done 2 of these trades. One in my kids' account, and I did this one. I'm going to show you exactly the trade. And I'm going to break it down because this is where a lot of new traders or traders that aren't confident, they don't know where to get in. Right now, a lot of people are buying at the top when they should be waiting for those positions to come down so they can get involved in a more favorable position. They call it FOMO. And as a stock runs higher and higher, they think they're missing out. But what they don't realize is it's going to come back. Right now, there are so many stocks moving higher and higher, they're going to pull back. And you're going to be left holding the bag if you get involved now. So what we do is we find great entry points with a more favorable chance it'll go higher. And in the case of the cash secure put, unless you really wanted to buy the shares using a cash secure put, what we try to do is pick strike prices where the stock will move higher, we'll collect all that premium, and we will never assume the risk of owning the shares. Now, some will do this as a wheel, where they'll put on the cash secure put, get paid that per share premium, be assigned the shares, and then write a covered call. The wheel is a very favorable trade if you stick with it. Well, what I like to do is get involved in that trade when the stock's trading lower in the range. Hey, this is where I found all my success, because when we find ourselves low in the range, Wall Street comes back to them. You just have to believe that. If you don't believe it, then you're going to find yourself always buying high, and when the market falls and you have money emotions, you'll sell low and lose money. We don't do that. Every single video I show you, for the most part, we always give ourselves downside protection. Whether we're getting involved low, like AAPU right here, or we're doing an in-the-money covered call, and that gives us downside protection. We're always looking for a little downside protection. Why? Because this market moves up and down, and it can move violently. We'd love to have a little downside protection and still make money. That's my sweet spot. I show all my members and anybody that watches on YouTube, we don't use stocks. We use leveraged ETFs and leverage to the stocks that are great. Did you hear that? We use great stocks and then we leverage them up. The reason is single stock risk will break you. Just ask a lot of the traders in Merck when they got involved at 125 and that dog is at 80 now. Well, I got involved in that, and I'll tell you what, it let me down. So I decided at that point, no more single stock risk. Leveraged ETF to the indexes, leveraged ETFs to the sectors. And if we're going to use a single stock, we're going to use the biggest and best because Wall Street comes back to them. So in this video, I'm going to show you AAPU. It's a 28-day trade, knocking it down. So hey, look, if you like anything you hear, I want you to subscribe to the channel. And hey, look, bang that like button. It lets me know you like what I'm doing. And what I'm doing is this. We're talking about Apple. Now, we're using AAPU, and that's the 2x leverage ETF to Apple. But we're talking about Apple. Make no mistake. We might be talking about AAPU, 2x leverage ETF, more IV when we write our covered calls for more premium and more cash flow. But we're talking Apple. And right now, Apple absolutely is trading in this beautiful range. So we are going to use Apple. And we go ahead and we look to use AAPU. what we want to do is find great entry points. And you can see right now on the screen, AAPU recently has triple bounced off the 20 strike. So what we're going to do is this. We're going to get involved with a cash secure put in and around the 20 strike. The one thing you have to know is when I put on a trade, and I show this to the members, which you're going to see, I want you to stick around. I actually put on a trade, the members got it, and they're benefiting. We don't just do that. We put on mentally the second trade. Because see, if we were assigned these shares, we got to have the second trade ready to go. And if this trade goes against us, well, we're going to feel like we're kicked in the nads. And quite frankly, we may not have the fortitude to put up the next trade. That's why every single trade has 2 trades ready to rock and roll. Whatever happens after that, we figure it out. And we figure it out all the time. So here we are. I'm going to use that 2037 strike. Yeah, it's a very odd strike. It has to do with this ETF giving dividends. So they have these weird strike prices. Well, that's the one we're going to go with, 2037. Now let's take a look at what I'm seeing on screen. Over the past couple months, you can see that Apple is bouncing off of this support. Now, this is AAPU, so this is going to be $20, but Apple is bouncing off 198, 195. So when it bounces off it the third time, we're going to go ahead and use it. And that's exactly what we did. We went ahead and put on this cash secure put when it's trading in and around 2077. I'd already done a 21 cash secure put. We're going to go ahead and do it again. This thing is trading in such a beautiful range, we are going to knock it down. And that's exactly what we did. We put on this trade you see on screen. When it was trading at 2069, we did the 2037 out of the money strike. We have to put on about a 28-day trade, largely because AAPU only has monthly options. But we're okay with that. That's 4.91% cash on cash, or $1,000 up front, because I made $1 in premium. So for you newbies out there, you're wondering what the heck is a cash secure put? Well, this is how it works. I'm telling the greater stock market. Right now, AAPU is trading for 2069. I'll buy your shares at 2037. I'll give you 28 days to assign me your shares at 2037. But you know, I'm going to have to set that cash to the side. And for 28 days, you're going to have to pay me to set that cash to the side. I'm basically giving you insurance, right? The stock's trading at 2069. You can't lose any more than 2037. So you're going to pay me $1 for that. Well, that $1 is mine to keep. That would be 1,000 shares, $1, $1,000 in my wallet. Now the trade's on, and we're going to have to wait for in and around 28 days. Now, more advanced traders know that I can close this, but let's stay right here. Right now, 28 days from now, if AAPU finishes above 2037, I'm not assigned the shares. If it trades below 2037, even if it's 2036, I'll be assigned the shares. That's what the market maker does. I make $1,000 or 4.9% in 28 days. Go ahead and make 4.9% in 28 days anywhere. It's kind of hard to do. When we sell premium, we can. That's $1,000 on $20,370 invested. That's pretty crazy. Check the trade there at the bottom. You can see on June 20th, which was 5 days ago, I went ahead and put this trade on. And it's going to expire July 18th because that is 28 days from June 20th. Now look, you're sitting there saying, hey, I love that trade, but have you ever used 2x leverage ETFs to companies? Take a look at that. This is what we do. I do this in retirement. I'm a professional stock trader. I sell premium. I'm going to show you what I make in dividend income. I want you to stick around, but more importantly, you have to understand we use leverage to our advantage. Why? Because we sell premium. And when we sell premium, we can make incredible amounts of near-term covered call profits. Whether AAPU goes anywhere above 2069, because that's where it's trading, I don't care. Because I'm going to make $1,000 in premium, and we're going to pocket that money. Our cash will be brought back to our account, and we can do it again. Look at the screen right there. This right here, in the past 6 months, is what I've done with 2x leverage ETFs to companies. And if you've been watching my videos, you know I use 3x leverage ETFs to indexes incredibly. It's all about using a great company, and we're just going to jack it up with a little bit of juice using the 2x leverage. That's why I use UPRO for the S&P 500 instead of the SPY. Why would I put on a cover call using a 1x leverage ETF to the index, maybe making 50 cents a share, when I can make $1.80 a share using its 3x leveraged ETF relative? Now look, you're thinking to yourself, man, this membership he always talks about, what does he do for the members? Here's 3 emails I sent to the members. We talk about Apple using AAPU, 2x leverage ETF to Apple. We talk about how it's holding great support. It's right there in the lower right. I do that write-up for the members, and that kind of juices them up knowing that it's coming. Because I don't just do my research and then just put it in the ether. I'm going to do that trade because that's going to knock down $1,000 and I'm in retirement. That's a beautiful trade, regardless of what you think. And then I give them updates. As you can see, we talk about potentially a poor man's covered call trade using Apple. Incredible amounts of information. Now, I never did that covered call on Apple. I used AAPU instead. But I'll tell you what, that Apple poor man's covered call would have been awesome. Then finally, AAPU is moving sideways to higher. It's bouncing off of that 20 strike. I go ahead and let the members know what I'm doing. It's still a good trade, and I'm still in it. Now, what you need to understand is when I send them a trade, they also hear all the commentary that comes with it. So when I trade it or roll it or sell it or do whatever, they know when that happens. Look, at the end of the day, writing covered calls and selling cash secure puts is the true golden goose of income investing. You're saying to yourself, I've never heard of selling premium. Writing covered calls, selling cash secure puts is the golden goose. Because that $1,000 I'm making on this AAPU trade, that's the golden egg of profit. We're going to take that golden egg of profit, that $1,000, and when this trade is over, we're going to buy a dividend-paying fund. That dividend-paying fund is going to pay me weekly and monthly cash flow. I literally printed money. I went from nothing to a golden goose egg of $1,000. Then I bought a dividend-paying fund, which pays me weekly and monthly. Take a look at the first 2 weeks of June 2025. This is per week, not per month. We do this professionally, selling premium, making profits, paying the tax man. I always take 25% of my profits, regardless of my tax situation. I set that to the side, and I buy a dividend-paying fund. XDTE is my placeholder for the tax man. I want you to learn it. I want you to do it. That's how wealthy people think. If you're not setting money aside for the tax man, you're a trader. And traders ultimately lose. We're wealthy. And I don't know about you, if you ever meet a wealthy person, they're usually wealthy for a reason. Well, that's what we're going to be. So we got 25% going to the tax man, and then the other 75% buying any number of these dividend-paying funds. Now, you might have your favorites, and you may not like the ones that I buy, but what I'm here to tell you is the golden goose of investing allows you to take a stock or cash in your account and create a profit for which you never had. So that's called my cash printing machine. I take that golden goose egg and we buy a dividend-paying fund, adding to this. So if you're in retirement, every single trade, you're giving yourself a pay raise if you're following me. Hey, look, I'm going to leave it right there. In the description below is a 1 free month offer to my membership. You need to be a part of it because you would get every single one of these emails, every single one of these trade alerts. And when I showed you these trades, all of these trades, are you looking at the screen? Look at all the green in that green column. You'd have got every single trade. And I use that for my kids' account as well. I'll tell you what you don't know, I trade my kids' accounts. I take all their profits. I do exactly what I've told you. My kids are young and they're generating over $1,000 a month in dividend income. That's the benefit of selling premium, taking the profit, and buying a dividend-paying fund. Hey, look, I'm going to leave it right there. In the description below, get your 1 free month offer. Would love to welcome you aboard. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable. 1 free month offer in the description below. Would love to welcome you aboard.